Sarah. We are doing week 4, chapter 3, charge of reviewing exercise 3-5. There's 3 parts to 3-5, so let's go ahead and get started. So the first part of the assignment shows us the information. It says a tabular analysis of the transactions made during August 2017 by Blossom Company during its first month of operations is shown below. Each increase and decrease in stockholders' equity is explained, and it shows on the left side of the screen the assets, and then that equals the liabilities and the stockholders' equity. So this is kind of a new format for us for for chapter 3, which is lesson 4, week 4, and we are then instructed to put that into a income statement. So if you'll look at the income statement, the first assignment that we have right here is that we need to fill out what the month is, and it's for the month ending August 31st. So just remember to make sure that we put the month ending August 31st and not just the date August 31st. And the first option here is revenues. Remember, we're going to put all of the incoming first and then all of the outgoing second. So revenues, we're going to type in service revenue here. And if you look at the service revenues, it says $10,100. So that goes in this first dollar amount here. The next options are the expenses. And expenses, they want us to put from top to bottom. And so we go up here, and the first expense is the rent expense for $800. So I put that in, $800. Second is the salary of $3,700. So salaries and wages goes here, $3,700. And the third one was at the bottom, utility expenses for $290. So there's the utility expenses. So then we have a total expenses, adding those 3 up equals $4,790. Taking the revenue of $10,100, subtracting out the expenses of $4,790, we have a net income of $5,310. That is part A of the assignment. Then it will allow you to move on to the retained earnings statement. Again, we have month ending August 31st. Retained earnings, at the very beginning of the assignment, it says of operations. There are no earnings to begin with because this is a new company. And our income of $5,310, and we get the information from the income statement here of $5,310. Subtract out, so we have less, take out dividends, $100, that's in this list up here at the top. Dividends, $2,200. That goes here, and then that gives us a balance because we take 5,310, subtract out 2,200, and we have a retained earnings at the end of the month, so the 31st of August, for $3,110. That completes part B and allows us to move to part C. Part C is a little bit trickier to pay attention to. The first one is, remember to list those current assets in order of liquidity, and that throws me every time, so be aware of that. putting current assets in order of liquidity. On a balance sheet, we just put the date. We don't put a month end or a year end. So we're going to start with an August 31st, 2017 date on the balance sheet. As you all know, we start with current assets. So going back up to the top, we're going to start with cash because that is the most liquid item. So for this situation, we need to remember that we're going to take all of the cash items, not just that first one, cash items. So if you take $20,400 and subtract out 960, 740, and then you add back in 4,700, subtract out 1,900, subtract 2,200, 800, add in 390, $100. That gets you to a cash total of $190. Second is the accounts receivable. That's money that was received during the month of August. Going back up to the chart at the top, we're going to do a simple subtraction problem on this one as well. $5,400 taking out or subtracting $390. That gives us a balance for accounts receivable of $5,010. The third item is the supplies. It's not a supplies expense, it is just supplies. And at the top, you'll see that the supplies is the $740. And that is under this category of supplies right there. You're going to find the information on this side. You're going to find it under supplies and $40. So we can take that down to the bottom, add that in supplies to add up the $15,190, $5,010, $740 for a total current assets of $20,940. The next option is remember the land, equipment, buildings, that kind of category. So we've got equipment, and that also is up here for the $4,960 here. That's the only additional item besides the current assets. So we add the $20,940 of current assets, $160 in equipment, for a total assets of $25,900. Liabilities. And the first item on this in the current liabilities is the account payable. We can find the accounts payable in this category right here. A simple subtraction addition problem, $4,000 minus $1,900 plus $290 goes into the accounts payable for a total of $2,390. Next is stockholders' equity. Common stock of $20,400. That one's a simple one, $20,400. Retained earnings is going to be another problem that you have to figure out. Retained earnings is all of these items in this category. So we take $10,100, subtract out $2,200, subtract out $800, $700, and $290. That gives us a total of retained earnings for $3,110. Now we're going to take everything in the stockholders' equity category, add those together, add the $20,400 and the $3,110, $510. Total liabilities and stockholders' equity, meaning adding the $2,390 to the $23,510, gives us a total of $25,900. You know that you're on the right track when that number matches 25,900, 25,900. that is the last portion of this assignment. Since this is our first week, I have no idea if I did it right, but hopefully this is what the instructors were looking for when they asked for us to do a share. Questions? Otherwise, we'll talk to you soon.